Good afternoon, traders. This is Christian Farmer at Starbuck Trade Group, and this is your end of day market recap for Wednesday, July 31st. And that means it's also your end of month recap, which I will go through some performance. Oof, geez, some of these areas were just on fire in terms of performance for the month. Some sectors were just up unbelievable. I was just reviewing this before I started this, and then of course there was some areas that did not do well, and I think at this point you know which areas those were. Those were related to technology. But before I go over the day's performance, and we'll talk a bit about that. But look at where we've kind of finished for the major indices. I think I went over this in yesterday's video too. By the way, risk disclaimer is right down here. Everything that I'm going through is for information purposes, only, not giving out any advice or recommendations. Please read the full risk disclaimer right there. So, here's where we are for the month. Just pretty unbelievable for performance. Had you would have asked me if this is how this month would have turned out, I would have said no way. Look at the difference there. S&P finishes up 1.2%, but what a turnaround from where it was in the first half of the month. One of the things that I have talked about quite a bit was that is that you seldom get two really the whole month being very strong. It's either the first half or the second half of the month is usually strong. Usually it's the first half. And that was pretty true to form. I think, and I'll start, I was looking at we'll review some earnings names too, but let's just talk about the major indices first, and then I will get to some of these names that reported. But wow, look at, we actually got to the top of the value area. So look, I mean, so first of all, just look at the day that the candle that you had today. Look at all the trouble with getting through that 50-day moving average. We held support. We completed the bearish 80% rule, which means you start above the value area, and once you break in, there's an 80% chance that you break through. So another example that played out for the S&P and for the Qs, the 80% rule, which again, you can Google that if you're not familiar with the 80% rule. I mention it a lot when it occurs in my pre-market notes, when something has triggered the bullish or bearish 80% rule. And again, I'm not going to explain that now because I want to make this video quick. We will be doing a member value area webinar to kind of go over what the value areas for the month of August are telling us, where we will take questions and go through those things. But you could Google 80% rule and value areas, and you'll get some definitions based on that. But so any event, that completed just yesterday, and then look at the move. I mean, such a whippy month. And again, look at where the first of the month was and the 15th of the month. I think that was up about 3 or 4%, only to kind of give it back and then saved by today's market action coming right into the top of the value area. Also, we found support. I mean, just crazy in terms of the swings that we're getting. And here was the support yesterday that I talked about. We came damn near close to taking out this VPOC, virgin point of control. We didn't. But look at where we stopped, right at the top of the value area. And again, some people who are newer to these videos, they ask me like, "Hey, you're drawing those boxes, right?" No, this is what the MarketWebs value area study does for us. It gives us some crucial levels of support and resistance that are based on the market profile. Right? We take about one standard deviation of that market profile. Again, I don't want to give away the secret sauce. It's not exactly one standard deviation. There's a lot more involved in the calculation, but look at how well that did, and look at how well the top of the value area for the week, which is this box, and the pink, the bigger box is the value area for the month. Look at how well those lined up in terms of the top of the value area. So that's where we are now, and we will start the new month of August. We will be inside the value area, and wow, just really whippy price action, and it's going to look different because when you look at the SPY chart. Right, you're going to see a smaller candle because the S&P futures they cover the after hours and pre-market activity, and SPY just covers that candle just covers the 9:30 to 4:30 cash trading time. So in any event, price will open up inside the value area and gets back above. I think that's the 5 period moving average, maybe here. Is way down here, but the only one that it has to contend with is a 20-day moving average. But man, that's one hell of a move today. Let's do the same exercise with Qs. looking at the daily chart. Also got back inside the value area today for the month of July. Again, good first half of the month, and then a disaster second portion of the month for I don't want to say disaster, that's too dramatic, but a pullback is probably the better way to recap. And this is, even though this outperformed today, it has more work to do considering how beaten up it was, and that's going to have to contend with the 50-day moving average and the 20-day moving average. But there you are. There's the cues, and similar to the S&P on the 1-hour chart. Let's see if I can. This found support right at the bottom of this week's value area. It actually pushed a little bit lower. That's why you see it being a green box, because it triggered the bullish 80% rule. And don't forget, we have 2 more days of the week. I know it kind of feels like for me, it feels like it's a Friday because it's end of month and we had so many things line up today, but we've got 2 more days and we'll actually have a jobs report on Friday too. But we're getting very close to that top of the value area too. All right, so that's the cues. So there will be different monthly candles, I guess, but not weekly or daily. Here's IWM. This was, I mean, you talk about a tricky 1-hour candle there. Price, and again, always tricky for the Fed meeting, and I'll recap that with you in just a second as well. But always tricky the Fed days, particularly the IWM, which broke out there full green on bar, and then once we got to the 3 o'clock hour, retreats and basically back to almost where we started the week. So again, the small caps, if you kind of look at what the small caps have been doing here, just a lot of consolidation. They had that big move, and then have basically flatlined a bit over the last couple weeks, but are still, the trajectory is that it's moving higher. Right, you could draw a support line in here, and dips are getting bought. All right, so very interesting to see how this played out today, because small caps really didn't have the momentum, but got going, when Powell started to speak, and but then stalled out there. So interesting looking candle there. But still, even though sometimes you get some ugly looking candles like this, as long as you don't lose the 5 period moving average, should be okay. Speaking of Powell, so I personally didn't get much out of it in terms of I don't know if you did, but we knew that coming into today. Um, Powell says Fed could cut rates as soon as September. Well, Fed fund futures are fully pricing in this. I actually tried a short. I had a small put spread on for IWM, and that didn't work. But I just thought that the risk was to the downside, because the market's fully pricing in a September rate cut of 25 basis points, and he's still like, he didn't give an affirmative that they're definitely going to be cutting interest rates, but it sounds like they're pretty much there. I think he just wants to be careful and like hedge himself with not saying that there's no reason for him to come out and basically say that they're definitely going to cut interest rates in September, because then the market will, would probably go up more than it did today. And why do that when you've got more inflation data coming out? He wants to be right, and he doesn't want to be wrong at this point. And if there's a higher inflation report that comes out, he's not, and he goes out on a limb, that's just makes him look that doesn't make him look good, right? I want to make sure how I say that. All right, so there you go. But and here's the telltale is Fed fund futures, right? Here's what the market is pricing in. Right, you still have they're definitely implying that there's a rate cut coming in September. Again, this is what the market is pricing in, right? Remember, again, I'm going to reiterate this again because I always get questions on this, right? This is the overnight rate. What the Fed controls is the overnight rate. If you don't know what that means, it's the super short-term rate. It's shorter term than T-bills, which is a monthly contract. Right? This has nothing to do with TLT. Well, I shouldn't say that. It directly has nothing to do with TLT. Why does it have nothing to do with TLT? Because TLT is the duration on that ETF is about 18 years of bonds, right? The Fed is not changing the interest rate on the long-term bond rate. They will, if they do cut interest rates, are just cutting the overnight rate. That's the rate that the Fed that lends the overnight lending rate to banks, right? That has nothing to do with any of the long-term, the 10-year, the 20-year, the 30-year bond. Now, you could make an argument indirectly that if the Fed is cutting interest rates, right, that the economy is getting a little bit softer, right? And usually when the economy gets a little bit softer, bonds do go up. Your bonds rally a little bit. So there, that's the direct and that's the indirect, right? And bonds did rally today, and they're now above this. Now, again, you have to kind of look, and I'll talk about bonds here for 2 seconds because I don't want to make this whole video about bonds. But this has made a nice move, and it's now higher than the June highs. Now, when you go across different maturities, notice that there's a bigger rally that's going on in the 7 to 10 year, right? Again, the TLT has a duration of about 18 years, I think. The IEF is 7 to 10 years. So bonds are really rallying on the shorter end of the curve, right? And here's IEI, which is even shorter. This is 3 to 7 years, right? So these bonds are really rallying on the shorter end of the curve. Okay, so again, very different looking charts in the bond market. All right, but this is interesting, and that's why I'm covering it. Also, again, there's always a lot of big moves going on when you have a Fed meeting. One of them also was GLD, which was up 1.8%, and that also rallied pretty decently. If we look at the spreadsheet for the day before I cover the month data, I have to change. I think I have to change a couple of these here. Yeah, the VIX fell 7.5. Finally, the VIX gave way a little bit. But once again, this was a huge gap up, and the semis still did well today. I'm sorry, the semis still did well between 9:30 to 4:30. Overall, the semis gained 7.6%, but the majority of that was what happened during the during the after hours. So again, I reiterate this a lot in these videos that the majority of gains are made in the after hours market. And you could see by these moves, look at the Qs finished up 3% today, but almost all of it coming, in the pre-market after hours activity. Still had a nice day, went up 70 basis points from 9:30 to 4 o'clock, but the majority of those gains are made in the after hours market. Again, that's why I'm a swing trader. You have to hold positions to get this whole portion of the gains for any of these. I'm just highlighting this one. All right, small caps, again, they didn't do much today, but they still finished positive. I'm talking about the trading session. And, the only thing that really sold off decently after the open today was Chinese internet names. They gave back 1.2% there. Also, the home builders were not strong today. They've been strong for the month. But there you have it. And XLK was up 4.2%. I mean, just colossal moves, huge moves in the after hours market. I know that there's like a lot of, Twitter sounds like everybody went long the semis on the close yesterday. Congratulations if you made that trade. But I'm telling you, because I give you in these videos how difficult it is. This was a difficult month because, first of all, a lot of these gains were really made like this. There was a lot of gap up and fades. If you shorted, not today, but if you shorted a lot of the gap ups over the last couple of weeks, you made money doing that because a lot of things gapped up and then they faded. So it's very, very tricky markets. So again, let me get to the performance for the month. Let me just review a couple names that reported earnings because there's some interesting ones. I went long a little bit. I kind of feel like I just had to make a more aggressive move, but I just said with Qualcomm down, I bought some Qualcomm right before the close today and got paid on this. I did get out of the position because we got up to the top of the value area, but there's a lot of other interesting moves that took place. Look at this Zeta. I put this on. I don't have anything on now in this name, but this is a nice small cap name making some big moves. Carvana, last I checked, was making a nice move all the way up to that VPOC up there at 152. Meta, I think, is off the highs here a little bit. Took out a VPOC there, and that's the top of the value area, but still a gainer, so not bad. Some other moves this in the after hours. So again, like there's a lot of good earnings reports. I continue to add names to the TTG strong gap earnings list. I think we've got well over like 40 names at this point. OLO is another name up 14%. Max, I don't even know what this, I've never heard of this ticker before. That name's up, the smaller cap name. I've got smaller cap names in here too. TMDX had good earnings. So that's a name that's been in the TTG trend portfolio. So nice move, real nice move there. We went over Carvana, Nova, which is a solar name, but a lot of names up, a lot, the whole page has names up over 2.5%, versus the names that are down. Now, again, Teladoc, it's not a very has not been a very strong name. That name is down. But again, there's a lot more names that are going up right now than are going down. Also, when we look at breadth, right, we talked about this in yesterday's video too. The breadth has been pretty darn strong. Look at the S&P new highs today, 156 4-week new highs versus 16 new lows. Right. And again, today was about tech and semis, but there's been a lot of other areas showing strength, and it's nice to see it broaden out, in my opinion. All right, so that said, let's get to I don't think I want to I think that's enough for a review, because again, I don't want to make this video too long. But so for the month to date, and by the way, I will flash my P&L as I put that out on Twitter every month end. I did not have a super great month. I did finish positive for the month. I'm now up 20, about 22.5% for the month. So again, I've been like slowly moving the ball forward. This is not one of my traditional years so far where I usually outperform the indices a little bit better, but I view this year as has been very tricky. And but I'm happy to have a positive month, and I outperformed once again. If you look at where these indices are, let me just go back to my other spreadsheet for year to date. But yeah, so right now we've got the S&P up about 16% year to date. The Qs, which were leading, came in a little bit, still up 15% because Qs were down for the month. And big catch up for the mid caps and the small caps, both up 11.6%. But yeah, I mean, I'm happy to be outperforming. I wish I was outperforming a little bit more, but I'll take being up 22.5% year to date. ARC is down 13.1% for the year. The IBD 50 is up about 8%. Just shows how difficult active investing is with both of those funds underperforming the market. With the ARC Innovation ETF, I'll leave the negative commentary for someone else, but growth and value, growth is still up 18% year to date. And bonds are down 4.1%. The dollar's up 6.2% for the year. I want to talk about sectors, as I talked about that in the beginning of the month. Oh, what happened here? Hold on one second, guys. All right, so here we go for the month. I mean, look at the astounding move in the regional banks and the home builders. The regional banks, the financials are the biggest weight in IWM. So if IWM was going to outperform, the regional banks needed to do it, and they certainly did that. They put in a huge month of up 19%. Again, I think a lot of that also having to do with positioning, probably a lot of shorts in those regional banks. Those shorts had a cover. We talked about earlier in the month that there was a speculative, big, decent sized short position in Russell small cap futures. That position also had to be covered, and it was about a week ago. Something we went over in the member video over one of the weekends. But if you get through that, even like GDX had a big month of 12%. Aerospace and defense, that's a group that I've been concentrating on a lot. I have a lot more conviction in some of those names than I do in the regional banks. Up 8.4% for the year. Metals and mining up 7%. Interesting because we saw call buyer and XME. I actually put the XME into the TTG trend portfolio a couple weeks back. Overall, so why did financials not outperform the same way? Well, because in the XLF ETF, you've got a little bit of everything. You've got exchange stocks. You do have banks. You've got insurance companies. You got a lot of different moving parts in that XLF ETF, right? And industrials did well this month too, up 5%. Materials, again, just look at just a wider array of participation this month. Of course, what didn't do well was your and this really kind of masked things a bit because tech is about 28% of the S&P, and when that falls, right, it's going to impact the overall market. And software was down 2.6%. Medical devices were down 2% for the month, but the semis led even with today's performance, and I believe that includes it. What it did today. I mean, what a comeback today. If not, the semis would have been down over 12%. I'm just going to check that real quick. Yep, I just wanted to double check that. So when you factor in today's 7% gain in the semis, so the semis were down 12% coming into today. Oof, what a move. All right, guys. So that's it for the month end video. Couple quick things. If you are looking to be a member of Tribeca Trade Group, one of the things that I don't talk about that we do is every morning I furnish members with it's about a 10 to 15 minute pre-market video. I go through things very quick as I do like in these videos, but I talk about potential setups. I talk about the themes going into today. I don't talk about any of the, I try to get the information as efficiently and as fast to you as possible. I don't talk about sports. I don't talk about the wine that I drank last night and how great it was, right? I'm trying to be as efficient, right? Trading, you've got to be as efficient and fast as possible and process information quickly, as well as I know many people are now back to work. So I don't know how anybody can listen to some of these broadcasts that go on for 2 hours. I get you the information in 10 or 15 minutes so that you can make decisions. All right, guys, that is it for the month, and I hope to see you in the trading room. Take advantage of it. First, you can get you get half off the first month as a trial. I think you could use coupon code TTG new, and you can go to tribecatradegroup.com. Have a great night, everybody.